Hey traders, Nick here. It is Friday. Can't believe the week is over. After March is closed, doing a little recap and kind of get an idea what happened today and where we sit in the longer time frame. All right, first, if you're not a subscriber to the channel, you can subscribe and hit the bell in order to get notified. Why? Because we are starting to go live every once in a while. We did it twice this week. So in case you don't know, there is a bunch of people that get together, over 300 people every day, and we trade all day live inside our own little live trading room. We do great work, a lot of fast trades, a lot of slow trades, a lot of education going on, great charts, all kinds of disciplines, options and such. So I think it'll be interesting. Just take a peek. We're going live a couple times a week. If you don't put the bell, you won't know we're going live. Okay, on to business. You're looking at the S&P, the SPY. So this is a 30-second chart just to exaggerate the point that's going on. Uncommitted markets. 1 minute they love it, the other minute they hate it, and then they love it again. We did a good job tracing it today, and we caught a really good short up here and a pretty good long in the end. A couple of frustrating stops and starts. And that describes how everybody's trading these days. If you're not investing and slow trading and doing a lot of homework and having a lot of luck, you're getting frustrated trying to trade actively. So I'm going to simplify it in order to get, first of all, what are you doing? What's your rule of engagement for the next couple of months or couple of weeks? Otherwise, how do we know what to do? Are we buying dips? Are we chasing rallies? Are we shorting rallies? What are we doing? Okay, so in order to do that, we have to zoom out a little bit. So I'm going to zoom the time frame out from 30 seconds to a little bit longer. So this is the S&P daily chart. So this is probably about a year's worth of data right there. First of all, today on Friday, we had another good week. So that's several strong results in a row. What happened is the bears need a new headline. In other words, all the bad news has been baked in to a degree. And if we have a new bad news, it's not like a new revision of an old theme. It has to be like new. Like in the middle of March, we had the financial crisis, which came out of nowhere. That was not on anybody's plate. All right. So the bears need one of those, something that we haven't seen. On Friday, the indices shrugged off a big drop. And the one thing that stood out is the fact that there was tremendous weakness in the VIX. So now it's, 16, something like that. That's almost 16 dot something. I haven't seen it under 17 in a while consistently. So let's see if this is going to be a sharp bounce. What does that mean? If it's a sharp bounce in the VIX, that means there's something going on in the market. But that's okay, because this is what we're talking about here. So let's go into next week with this idea. Today, the S&P came with under 1% from a breakout from the February high. So in February, we failed miserably right here. And it's taken us this long to come back. It was an inch away. Let's round 1%. Right here, the closing basis is probably 1.5% away from the highest close. So they're looking to break out. They can do it after a little dip. So if we have a hiccup and the VIX spikes, I shouldn't run for the hills. Why? Because here's my rules of engagement right now. I'm seeing higher lows and a breach attempt. So they're trying to push the door down from better stances. So maybe one little dip to come back and bust it out. Impossible? I don't think so. You know why? The QQQ, which is the NASDAQ, already did that. That's the February high. They broke out. They too can drop down to, say, 300. I'm rounding. It would be better if they just hold here, but if they go to 300, that's still fine. Come back and confirm the breakout. Okay, the Dow is kind of like the SPY. The only anomaly is the IWM, which represents the small caps. They're still lagging. I still have hope for them, and they need to participate. This is a basket of like 2,000 stocks. So here's my mode, a rule of engagement. I'm trying to get long on dips. And fast trading, that's easy to do. And like you could have done it today in the middle of the day. Slower trading, it's harder to do, but because I'm struggling to find good companies that are falling into support. For example, today, Boeing had a little dip. I was probably asked 20 times if it's a good time to buy the dip. I'm not exaggerating. I said, okay, so you could. This is one tick down into support. But I'm afraid that it's headed into an earnings report soon enough on the 26th. So that adds a lot of guesswork short term. I would rather wait to see how it handles the earnings. But you could miss the rally, so be it. Because it has rallied so much, I would hate to get long here and then it drops another 10% from the earnings. So if somebody's itching to get in, they can take half a position. But you see how I don't have a lot of conviction into this shallow drop, even though it's a substantial 5-6% drop. So I would hold off a little bit because technically I think it could be under 170 in the next 3 weeks. We shall see. Hopefully not, but if it does, I'm all over it. So I'm relegated to finding little sliver trades. Yesterday I shorted gold and I got a really good start to that trade. Gold today was shellacked. It was down like $3 or whatever. So that was a good start to my short. And I'm going to tactically close it to book the win. So I'm being more tactical than, oh, okay, I want to get long Microsoft, so let's load up on Microsoft. No, maybe not. It's not an obvious entry for the long term, but I would trade it short or long here and there based on support or resistance. So I'm struggling to find good fundamental trades. Some of the good fundamental trades were like BITO, where we bought it at 11. I'm trying to give you the difference somewhere down here. And we have this much. What is this? This is Bitcoin. Yes, it's a fundamental trade. If you don't believe it, you don't have to, but it is a real thing. And let's see, other things like, for example, Palantir. If you believe in the company and it dipped below $7, that, to my eye, for somebody that believes in the company, was an opportunity to invest for the long term. Same with SoFi. Companies that people don't like, that are towards support and that have a good prospect in the long term. I don't load up all on similar companies. Like I mentioned, Palantir and BITO, and not a company, but SoFi, they kind of trade the same way. So I take a little bite of each to make a nice little basket, but then I have other things on better companies. But those are not as available because we're still super high. What do I mean? Apple, this is the all-time high in Apple. This is where Apple is now. So there are no bargains out there. It's not like it's expensive, but this is not an obvious entry point. I remember jumping into Apple because, oh my God, I can't believe it's cheap. Like Tesla down in almost 2 digits, that was an entry opportunity. Instead, people were running away from it. Guess what we did? So that's the difference between tactical, where get in, get out, and opportunities like this one and Palantir. So yes, I'm optimistic for the market, but I'm not sure I want to pile into a investment type right here, right now. So I'm relegated to doing tacticals. So think of the market right now as a chess game, and the bulls are trying to break out, and the bears are trying to not let them have it. And so the question is 4,500 versus 3,500 down here. Which one first? So if you twist my arm to make the guess, I would say 4,500 first is easier than 3,500, unless the bears get a miracle headline that changes the world here. So we shall see. But next week we have the earnings report starting by Netflix and Tesla, I believe. Check. I'm speaking from memory, along other ones. Today the banks started off. Next week it's tech. The FANG gang plus Microsoft and Apple will follow for the next 2 to 3 weeks. And then we have the Fed rate hike decision. So we're going to have some turbulence, whether we have a dip and come back and breach, or a breach immediately, or just a dip and another dip below it and then below 3,500. For that to happen, it is technically doable, but without a new shoe to drop, I don't think it happens.